Alright, quick update on Bitcoin. So I'm going to start off this video talking about the basic market structure, talking about the EMA ribbons and a fractal that we keep on playing out time after time after time again. We'll talk about our price target from a breakdown that we talked about a couple of videos ago. We'll look at the SPY, the dollar, and talk about a few news updates. So there's a lot to talk about. Let's jump right into this today. Now, starting off with the basic market structure, you can see we've created, just like we talked about, a massive rounding top over in the 4-hourly EMA ribbons. We've come up into these and got slapped back down to the downside. I'm actually going to remove the MACD simply because I'm going to focus on this more as we come down to the next chart. But as you can see, market structure, this plays out time after time after time again. And you know, quite recently we've had many times where we've come up, got rejected from the daily EMA ribbons time after time. But right now it seems like we didn't even have enough strength to come up into the daily EMA ribbons once again, which should be very telling that the market structure for Bitcoin is very bearish right now. Now, you can also see it looks like we are breaking to the downside of a bearish pennant. Now, I definitely, yeah, I mean, if I take the price target of this, it's probably going to be at like 0. The price target would be, I fat fingered this, is going to be round about 8,000. So not going to be happening in my opinion. Nonetheless, the breakdown of this pattern in of itself, even if the price target does not get hit, which I'm telling you, it probably won't, is not bullish for the market structure whatsoever. Now, we also talked about this rising wedge coming up into the 4-hourly time frames. We did break to the downside of this. We actually had a fake out, so technically you would draw it from here. So it'd be more conservative at this point in time, as we did have a fake out, failed move equals a false move in the opposite direction. We moved back into it, and then we had the proper breakdown. Since that breakdown, you can actually see that we did hit the price target of this down at 20,200. So we might see a slight relief bounce over the next day, over the next 4 to 8 hours, before we do continue with this move back down to the start of this ascending channel. We talked about this being a 5.5% move. We have so far moved down about 2.9%, basically 3% even after this bounce, and subsequently we still do have about another 2.6% to head back to the upside before we can expect too much of a relief rally. But nonetheless, I think as we've got such a nasty rounded top playing out here, I think we're probably going to start losing momentum and heading down a lot quicker than some people expect. I also did talk about this on my Twitter, but we've got a bunch of potentially bearish things coming in the next month. We've got more CPI reports, we've got the next FOMC meeting in 29 days, and we have the next GDP growth for the US, the next GDP report for the GDP growth in the US in the next 30 days approximately. So within the next 30 days, if we get negative GDP growth, we will be entering a recession. That is a confirmed recession. The last time this happened was 2008. Bitcoin was not trading back then, so subsequently looking back at previous bear market cycles would probably not make too much sense, considering Bitcoin has seen a bear market, but Bitcoin has not seen a bear market in a recession. So this is going to be very interesting. Now, I also do want to talk about some bullish news, well, at least what I perceive to be bullish news. Now, I'm going to make a separate news article about this later, but Uganda has recently found a massive pile of gold. Now, let's come back. I believe it was over 12.8 trillion, 320,000 metric tons of refined gold. And once again, this just shows that, you know, as Saylor said, Michael Saylor, Giga Chad Saylor, gold is plentiful, Bitcoin is scarce. So what does this mean? The supply of gold, because the market cap of gold is, you know, around about 11 to 12 trillion. I don't check out the market cap of gold every day, but nonetheless, this is approximately the market cap of gold. So what does this mean? The supply of gold has just doubled like that. You know, the supply of Bitcoin is going to slowly increase over time. Bitcoin's inflation is at a set level from a mathematical perspective. You know, Bitcoin is obviously inflationary, but the inflation gets lower and lower over time. A lot of people say Bitcoin's deflationary or it doesn't have inflation. You know, that's not true, because Bitcoin has inflation to pay miners. Nonetheless, that doesn't mean Bitcoin's bearish. That is a good way to reward the miners for protecting and making the network more stable. But with that being said, there's only going to be so much inflation in Bitcoin, and we know based on the halvings how much inflation we're going to have every 4 years or so. We don't know that with gold, and this is proven with what Uganda has just discovered. If you know, if for example these countries, they keep on getting better mining equipment, then they might just be able to find, you know, more and more stockpiles of gold. That's, you know, that's kind of how gold is, you know, with the supply and demand perspective on Bitcoin, along with a very, very small amount of other asset classes like Rolex, they're basically the only asset classes which supply is not affected by the demand. What does that mean? Bitcoin's got a fixed supply. If more people want Bitcoin, then the price is the only mechanism to adjust for those extra people to come into the market. If people want more gold, gold miners will simply use that extra money from gold that's been bought to increase their mining equipment, increase their mining power, and subsequently they'll increase the inflation of gold by using that extra money to mine more gold. If miners want to increase their money by buying better mining equipment, they're simply competing for the same amount of Bitcoin, meaning Bitcoin's supply does not affect its demand Bitcoin's demand does not affect its supply whatsoever. There's a fixed supply, and it doesn't matter if there's 10 people that are wanting to buy it or you know, 1 billion people. The supply stays the same. That is not the same with other asset classes like silver, gold, the dollar, etc. So with that being said, in my opinion, this is very bullish news for Bitcoin. This is bullish news for Bitcoin because gold's supply has doubled in the past couple of days, whereas Bitcoin's has only gone up by, you know, a couple of hundred Bitcoin or so that's been paid out to miners. So also the general markets, though, while we are getting bullish news like this for Bitcoin, these are really long-term bullish news. These are really not going to affect it too much in the short term. And we know this because the SPY, the stock market, is still heading down. The stock market is getting battered at this moment in time. And I've also noticed the stock market SPY is panning out a very, very ugly head. Well, this is the left shoulder, head, right shoulder. We're probably going to come down to at least 355 and then probably have a bounce before we do take out the floor of this nasty head and shoulders pattern. SPY being bearish, basically all the tech stocks being bearish, you know, the S&P 500, the Nasdaq, all of these you know, tech stocks, index funds, stock markets, whatever you want to call it, all of them are heading down. Tesla's heading down, Google's heading down, Coinbase is heading down, Facebook is heading down, the dollar is heading up. So these are all just punches in the gut to Bitcoin. You know, the dollar is time after time after time making higher highs and higher lows, and I talked about this before. You know, the dollar is making a very beautiful cup and handle at this moment in time that it is starting to break to the upside of. These are all, once again, punches in the gut for Bitcoin. These are not good indicators, and even in the higher time frames, it's really, really not looking too good for the stock market or Bitcoin. So, you know, that being said, there's a lot of bearish things going on right now. I think if we come over to, because I have another chart, I believe it's this one for the dollar. Let me refresh. So if I delete all of this and we head over to the Heikonashis, what you can see is we've got an even bigger cup and handle. We've got a massive cup, and then as you can see here, we've got the channel, and this is the handle. So we've broken out of a macro cup and handle, and even in the lower time frames, you know, we're breaking out of mini cup and handle patterns. So the dollar is super, super strong right now. The stock market is very, very bearish right now. This is the lower time frame cup and handle. This one that we showed you was the higher time frame cup and handle. Dollar's exceptionally strong, stock market's exceptionally bearish. This is going to bleed out negatively for Bitcoin, and we're already starting to see, you know, the dead cat bounce that everyone was getting out of bed for is already starting to capitulate. The bearish pennant is already starting to break to the downside. Even though the price target of this is not going to get hit, we are still looking very, very dire for Bitcoin. So let's wrap it up with our momentum indicators. What is the momentum in the market saying at this moment in time? Well, since we've started falling out of this bearish pennant, what you will notice is the squeeze mom on the 4-hourly time frame is starting to heavily trickle to the downside. This is really, really not good if you are a bull. You can see the squeeze mom has had a high and a lower high for the bears, and or for the bulls, sorry. So this means the bulls came in, had a lot of momentum, the bulls came back in again, had less momentum, and what we're seeing in the same time frame panning out for the bears had a little bit of momentum stepping in, and now the bears are having a lot of momentum stepping in. That is for the squeeze one in the lower time frames. The MACD, just like I highlighted in the last video, is starting to head down. If we do zoom in, you can see these light red candles pushing in, meaning that we are running out, or the bears are stepping in and pushing a lot of momentum into the market, also meaning that bulls are running out of steam as bears take the cake again. If we look at the OBV, the on-balance volume, the on-balance volume is just massively decreasing. Definitely not necessarily a good sign in the short term as we are heading down on the OBV. So a lot of stuff going on today. Like I said, there was a lot to talk about with these charts. Let me remove these. So the momentum indicators are not looking good. We are heading down. We're breaking out of all sorts of bearish patterns. We are fulfilling these price targets of these bearish patterns, and there's still more bearish price targets to come. And also, we had an inverse head and shoulders panning out. If I switch this over to the light side, you can see we had an inverse head and shoulders, which should be a bullish pattern. You know, we broke out, back tested it, you know, kind of M'd out, and it looks like we're coming right back to this again. So we're running out of steam. In my opinion, this inverse head and shoulders is not going to play out, unfortunately. Well, I say unfortunately, you know, I obviously don't hope it pans out. If you're new to the channel, warm welcome. I'm a long-term Bitcoin hodler. I love Bitcoin. I think it is the best asset class. It is the best currency. You know, just calling Bitcoin a currency or an asset class or gold 2.0 is wrong. That would be like calling the internet the news press 2.0. Bitcoin is so much more than just a currency. It's so much more than just gold 2.0. So to call it gold 2.0 or just call it a currency is basically an insult. And subsequently, I am a massive long-term believer in Bitcoin. So I am very much looking forward to Bitcoin going to these lower prices. I want to buy the dip. I want to buy a lot of Bitcoin as we do start capitulating to these lower price targets. And that is how I feel about Bitcoin. Bitcoin dominance basically stagnating right now. We've basically been chilling in this orange box, which once again, I might have to switch back over to the light side so you can actually see the fibs on this. But, you know, from our low to the high of the first run up, we back tested the 618. On this one, we've broken up. We've fallen below the 618, but we're still above the 786. So as long as the Bitcoin dominance stays above approximately 43% and even 32.7%, we're still going to be in a massive uptrend for the dominance. And that means that Bitcoin should outperform altcoins in the next coming months. So lots of bearish signals in the lower time frames, but once again, Bitcoin is going to remain king. There are tons of bullish signals stepping in, and I really do think that Bitcoin is going to be proven to be king over the next couple of cycles. That is all I've got for you today. Once again, everything's not really looking too good right now. We've got a lot of negative things coming in. GDP growth, CPI coming in at next FOMC meeting. This could be an absolute shitstorm for the economy, and subsequently we could enter recession, and this is something that Bitcoin's not seen before. Dollar's heading up, stock market's heading down, Bitcoin's heading down. Once again, just really not looking too good. So that is all I've got for you today. I hope you did enjoy today's Bitcoin video, and as always, my friends, cowboy out. Peace.